Miło mi jest powitać wszystkich obecnych.
I am pleased to welcome all of the people in attendance at our conference on the subject of PKP Cargo's results for Q1 2020. I regret that I'm not able to meet with you personally, face to face, but because of sanitary requirements linked to the coronavirus epidemic, we had to organize this meeting in the form of a video and conference call. This epidemic has greatly affected the global and Polish economy, and unfortunately, during the first quarter of this year, the PKP Cargo has also felt the impacts. So COVID-19, so the restrictions that have been felt by the group and what the authorities have done in other countries has affected the economy of many companies, and this has contributed to the needs for transportation services and for logistics services. And this applies to domestic freight as well as international freight. So coronavirus has first led to troubles and tumult in the Chinese economy. Many areas were closed, and before COVID-19 hit Europe, we saw that there were that the logistics were actually disrupted or distorted in terms of consumption goods as well as industrial goods, finished goods, and so this is one of the reasons for what happened with the containers in European ports. And this meant that intermodal transport actually fell in many different directions. And so basically this disruption led to difficulties in production in many factories. And in some cases, there was a temporary suspension. And so this is one of the reasons why the market conditions in rail freight were down. We saw that in the automotive sector because of the inability to deliver parts from China. It was not possible to produce as many cars. And so these factors meant that there was less freight, less finished goods, semi-finished goods, and finished products. Here I would like to point out several other important factors that affected the Polish transportation market. And this also had an impact on PKP Cargo's results. And so these negative trends will continue to have an impact on our financial results in subsequent months. Unfortunately, this was something that was also present in the first quarter of this year. And so we can see the decline in electricity consumption of 10 to 12%. This meant that there was less need for coal from the Polish mining group PGG, and this meant that there was less transportation of this fuel. And so then the situation in the construction sector wasn't so good. And so we had minus 1.9 from plus 0.1 in February. And so we can say that some of the private investments and public investments have been delayed. And some of them have been suspended temporarily. And that meant that there was less need for raw materials like aggregates in the construction sector. We also saw the March decision made by one of the key customers, ArcelorMittal Poland's decision was quite important, where they decided to postpone the resumption of the blast furnace in Krakow. And this is something that was stopped in the fall of last year. Had it not been for coronavirus, then our plans of our steel mill customer would not have been impeded, and we could have done more freight car. We could have carried more freight. So in the first quarter of this year, we saw a downturn of some 20% in freight turnover compared to last year. So we had roughly 23 million tons. So we do see some positive trends, which should contribute to more freight being carried by rail in the upcoming period. but this is linked, of course, to the gradual unfreezing of the economy. So the coronavirus in Q1 and Q2 didn't lead to any organizational problems in terms of what was happening in PKP Cargo. We've seen limited cases of infection of COVID-19. We had roughly 10 such cases. And so we have more than 20,000 employees. So this is a small number of instances. So in the peak of the pandemic, we saw tens of employees in quarantine. So we can say that the operations of PKP Cargo were not destabilized because the logistics and freight process was not at risk. I'd like to thank the members of our crisis management team, which we appointed in March of this year. And Witold Bawor, who's a management board member, is heading up this crisis management team. So they devised procedures in order to ensure safety to our employees in the workplace. So we made changes in the organization of work to ensure that there are as few as possible interactions between people and to maintain social distance. Of course, we had many people working remotely, and we tried to make sure that we had as few as possible direct meetings and business travel. We made sure that our employees had personal protection means as well as disinfectants. The epidemic regulations were followed also by companies cooperating with PKP Cargo, so the entities that deliver parts for the renovations of wagons and locomotives. Of course, this has generated some additional costs. So in the conditions I've described, it was not possible for us to generate financial results that would satisfy ourselves and our shareholders. We had counted on improvement in the market conditions in the first few months of 2020. But as a result of coronavirus, it turned out that this was not possible to achieve. So Q1, PKP Cargo is finishing up with worse results than it had in the same period of 2019. Now I'd like to walk through the presentation briefly, and I'd like to discuss some of the financial and logistics results, operating results that we had in Q1 2020. So I'll present this presentation in just a moment, but you can find it. It's available to you, and so if you can pull it up, I'll go ahead and try to walk through the various slides of this presentation. So if we look at the main buckets in terms of financials and operational figures, this is slide 4. And so as you can see, our revenue was 1,036 million. In Q1, we had 90 million of EBITDA profit, and the EBIT profit minus the loss we had was 106 million. And then in terms of freight turnover, we had 5.8 billion thousand kilometers, and we had freight volume of 23 million tons. If we flip now to slide 6, we have a comparison of the most recent 5 quarters. So also a comparison with respect to Q1 2019. And you can see that our freight turnover has fallen by 18.4%. As I mentioned, it was 5.8 billion as opposed to 7.1 billion in Q1 2019. But if we compare it to the most recent quarter, when it was 6.4 billion, it's roughly a 10% decline. And we can look at the various product groups that were affected by this decline. We had the decision made by Mittal, a key customer, about not resuming production. So if you look at metals and ores, you can say that the decline was roughly almost 50%. And so we had energy, bigger inventories of coal amongst our clients, so there was less need to transport coal. And so that's why in this segment we had a decline of 16%, 34% here in aggregates and construction materials. And then intermodal transport, we had a decline of roughly 10%. So I'll discuss this segment in greater detail a little bit later during the presentation. But if you look at other cargo, we were nearly up 4% compared to Q1 2019. As I mentioned, the COVID-19 illness affected our operations, the operations of our clients in the most important industries. This is true of solid fuels, aggregates and construction materials, metals and ores, intermodal transport. So I've already mentioned a little bit about this, so I won't drill down into the details. Having in mind difficulties our customers have encountered. So in Q1, the revenue in Q1 was above 1 billion. So this was slightly less than 18% less than we had in Q1 2019. So if we compare it to the previous quarter, it's roughly 10%. So we saw roughly 225 million shortfall in terms of the decrease of revenue. If we look at the EBIT change, and so we had to react quickly through the costs to the decrease in revenue. So at the net level, we had negative results. We weren't able to offset in such a short period of time all of the shortfall in terms of the revenue. We're working very strongly, of course, on these costs, and we're making decisions here to utilize the anti-crisis shield, which will enable us in the short term to align costs to revenue in order to balance them, in order to go back to the path of generating profits in upcoming months. If we look at the next slide, which is slide 11, here we have the EBITDA profit, which was 90 million zlotys, as opposed to 258 million in Q1 2019. So it's down some 65%. But if we compare it to Q4 2019, the decline is much smaller. The net result is 114 million loss, as opposed to 53 million profit in Q1 2019. If we look now at the financial parameters concerning our financial stability, on slide 12, we have available funding sources and some of our debt. And so we've made comparisons between what was the case at the end of the year, what's the case at the end of Q1. We can see that there's just a small decline. So the value is not very big, some 17 million. This shows you the stability of financing that we have. So we're essentially at the same level at the end of the quarters. So we have available funding sources. We had nearly 600 million zlotys of funding at our disposal. So we have a stable financial position at the end of the quarter. Now I'd like to say a couple words to talk about the execution of our strategy in the face of this market situation. In Q1, despite the downturn in market conditions and the crisis linked to COVID, we were able to strengthen our position in the intermodal transport segment. As you can see, we have a stable position, a sound position, and we're able to rebuild our position quickly and generate higher revenue. So in previous years, especially after we adopted the strategy in 2018, we've seen rapid growth. So if we look at its percentage of total revenue, we can see that in Q1, it was 15.2% of total revenue, whereas in 2014, it was a little bit over 6%. In 2015, it was 6.8%. In 2017, it was 10.4%, and now it's 15.2%. So here, as we see the growing growth rate of this type of transport in the overall economy, then our rapid growth of its market share, we're able to maintain a pretty big market share here, and we're an unchallenged leader. And also in this area, we're making organizational changes, we're tweaking our offer, and this shows that this decision was the correct one to make. The decision we've made in recent years and recent months and weeks. And so having in mind the coronavirus, we can say that we're thinking here strategically, we're acting strategically, and we're approaching this methodically to give ourselves an opportunity to grow quickly and return quickly to a development path here in the company in the upcoming weeks and months. This is something that corresponds, or this photograph of the market, snapshot of the market, is linked to some of the optimization or rationalization of what we're doing at PKP Cargo International, which is generating roughly 1/3 of freight turnover through intermodal. A couple years ago, this was a single digit. So we can say that this transformation from being a siding operator to being an intermodal operator has taken place. And so this is producing measurable results. And we'd like to continue this path because the growth rate we've seen is quite substantial. And we can see this in Małowice at the border crossings. Well, this is the gateway to the east to China, if you're moving east, as well as to Western Europe as you're moving west. And so in the last 2 months, we've seen that there's more and more freight volume, and the number of trains is at a historically high level. So we're making sure that we can integrate that supply chain value as a global operator. We want to be, as PKP Cargo, who we want to be as PKP Cargo is linked to this role as a logistics operator within the global trade format. So we can say that PKP Cargo is going through a transformation process as moving into a logistics operator for the European market from a heavy goods, bulk goods operator. So we have operator trains, we're integrating terminals, we're building a competitive offer where we can compete with other operators. We're working for producers, global producers, and we're preparing this offer in such a way we're listening to the needs of our customers. We're opening up new connections jointly with our international partners from different rail companies in different countries. second Lithuania. And so this is something that's noticeable. We're making investments in the purchase of intermodal wagons and multi-system locomotives funded by the EU sources. So all of this is taking place quite rapidly, and this enables us to and poises us to meet the needs of the customers, to be able to take care of all of their logistics needs. And of course, by digitalizing everything, we're able to streamline the handshake between ourselves and our customers. And so this is something that's quite important for us to do along the main pan-European and European corridors, along the new Silk Road. So whether that's new north-south or east-west, we want to be highly active, and we're supporting this process. And we can see that as an intermodal group, we're cooperating with others as a logistics partner. And so we've changed our name to PKP Cargo International. We've got the terminals and we've got PKP Cargo Connect. This is all part of the unified management that we have of the group. So we have those various parts of our groups: PKP Cargo, International, Terminals, and Connect. And that's more or less it in terms of the main intentions that we have in terms of what we want to do and what we've been able to achieve in Q1. As we sum up the financial results and the trading results we've generated in Q1 of this year. So here in May, it's our hope that the defreezing of the economy with respect to what we've experienced over the last 2-3 months, this is something that won't come back, and we hope that we've got the worst behind us. And we believe that the growth rate of freight should grow, depends on the groups of products. So for intermodal, we should see a faster growth rate east-west. We can see that now the overseas routes are being utilized as ships are coming into the Polish ports. And so the stabilization will take place over the next few months. And generally speaking, if we look at the power sector and the demand for coal and for coal transports, we can see rather stagnation here. And we're waiting for more consumption, and then more freight could be generated. So if we look at ores, we're waiting for what Mittal is going to do and when the blast furnace will be opened up again in Krakow based on our talks. Well, because of COVID, they're talking about pushing this date back. But this is still a challenge, and the situation in the upcoming months will still be uncertain. But we do see stability in some of the other segments. I think that's more or less it from what I would like to say. What I would like to say in terms of the wrap-up or the recap of the quarter, I'm at your disposal. The entire management team is at your disposal. So if you'd like to get more extensive responses, and so if I'm not going to be able to provide you an immediate response, then we'll, of course, prepare some more detailed responses. And now I think we can open up to the Q&A session. I think we already have some questions. So the first two questions are about bank covenants. Where are you in terms of the bank covenants? Is the company safe? The second question is about cost management in the medium and long term. What sort of activities do you anticipate taking? So if you look at the covenants, so Mr. Borowiec could respond to that question if he's close by. I wouldn't want to reply to that in detail. That's his area of competence. So we'll give you a detailed response to that question. So it's a very important subject matter, so I wouldn't want to get it wrong. But if we look at cost management, as I mentioned, having in mind the operational leverage the company has because of having a large percentage of fixed costs, and that means it's very difficult to adapt swiftly to declining revenue. But we've taken a number of efforts to optimize our costs and to rationalize cost levels. So we have a methodical and systemic approach to doing this. So we'd like to utilize the anti-crisis shield because our freight operations have been profoundly affected by the COVID crisis. So we estimate that the direct impact and indirect impact contributed to a decline of freight by some 20%. So having in mind that we qualify for utilization of this shield, we'll finalize our application in the near future and we'll submit that in May. And so we've signed an agreement with the trade unions about reducing working time by 10%. We informed you in our press release about reducing costs and the support from this shield. This would give us 120 or even more than 120 million zlotys. So that's more than the loss generated in the first quarter. So this is one of the methodological actions we've taken. So having in mind the situation that we'll deal with in the future, we'll try to align our resources to what we're going to be able to do. So we'll reduce our costs and also with respect to the suppliers of all the various services provided to us or the products that we have. So we've decided to reduce their quantity. So we have some successes here, and so we're reducing all of that within the framework of our operations. We have some internal procedures linked to expenditures for any costs. So there's extensive monitoring we're doing. And this is something that we're doing to reduce our costs, cut our costs. So despite the variety of systemic actions, we're taking very specific measures in order to adapt the headcount. So we had a decrease of some 300 people. And so we're trying to align our headcount to the quantity of work we're doing. So we're looking at the management of the full spectrum of costs. So not just headcount costs or payroll costs, but also the full spectrum of our administrative activities. And so we'll see the impacts in this quarter and the subsequent quarters. So, of course, some of the assistance we'll get will come from this shield. The next two questions have been recurring. We're talking about the investment rule and our CapEx spending this year, having in mind the challenging market situation. And the question is how the falling market could affect unit prices. Do we anticipate that there's going to be a battle on the market due to kind of a price war, reduction of prices? If we look over the year and look at each month of the year, the management is being guided by this pillar. Investments should not exceed EBITDA. So we don't want to spend more than 0.8 in the course of a year, but on a quarterly basis, we're also monitoring that. So in Q1, in the early months of the year, we weren't able to adapt to that, but we want to make sure that this figure is followed. So we're observing that quite strongly. And so where possible, we're making some decisions to rationalize. So this is a rule that we want to stick to this year. If we look at the market, as it constricts and what sort of impact this will have on the rates, well, we have different market segments. If we look at intermodal, we can say there are different rules as opposed to bulk commodities, where there are tenders in which we participate. Of course, we know that the quantity requested by the market plus the supply we have to give as the overall market, we can say that demand is being defined by these tenders and purchase orders, but we think that there's quite a bit of supply in the market. So we want to do a considerable amount of freight, more and more freight, but we don't want to devastate the market. So there might be some decline in the demand on top of price. We also have destination, time to destination. So these markets vary quite strongly. It would be difficult to define and say that price is the only factor, though price is an important factor. But we want to put together offers in such a way that will have those three factors in place: price, venue, and time. So, or destination and time. So we were and have been an operator that's catering to the needs of heavy industry, and now we're trying to become a logistics operator. And so then we can say that the way you build offers in this segment of the market is quite different. So we want to have the most competitive offer. We want to fight for the customer through our quality, and price is one of the contributing factors there, though it's not the only factor. So we see not so much potential for raising the rates, but we can probably stem the tide of downward movement in the rates. But we want to prepare such offers to make sure that the quantity of freight volume and freight turnover would be profitable. And that way we could take those orders and fulfill them. So we're thinking about how we can effectively deliver our freight transport. So in order to give a competitive offer that has reasonable prices, we have to improve internal operations. We have to be better and less expensive. And so these are things that we're also working on. So we have the customer on one side and the revenue generated by filling customers' orders, and then we have the costs of filling those orders. And so we have certainty that the rates won't rise, but we want to be able to do larger amounts of freight that's more profitable. So for the people who are listening, in terms of numbers, figures, we'll provide specific responses in writing. We have two more questions that show up quite frequently. One is about the talks being held in June of every year about raising salaries in. So this is about pay raises in this year. In June, what are the plans here? If we look at the long-term outlook, do we anticipate that we would ask PKP or the Polish Development Fund to ask them for assistance if it's going to be difficult for us to survive in the market? So if we talk about the trade unions, I mentioned an agreement signed with the trade unions. So it puts in place a suspension of negotiations on pay raises, so a pay hike. So basically those negotiations are frozen. So of course, as we look at the situation, what's happening on the market, we have to act responsibly, just like the trade unions are responsible. I don't think anybody foresees in the upcoming months. We'll see what's going to happen in the upcoming period. But with respect to the market situation and the long-term contraction of the marketplace and the need to have additional aid for the company to operate, well, I would like to say there's another instrument, which is the financial shield offered by the Polish Development Fund, PFR. We're analyzing that. So we have available funding sources of nearly 600 million in Q1 2020. But this other mechanism is available to every business entity on the market. So we're analyzing that, whether or not it's needed and it's applicable to us. We'll see. If we look at the product structures, we are working very dynamically on the market. If we look at the intermodal markets, it's growing very strongly and fastly. And in comparison with previous years, its percentage of our total business is on the rise. And so it doesn't seem that this part of the market's at risk and won't be at risk. So we want to be that strong logistics partner for our customers. And we'd like to be able to present and achieve the best possible results. If we look at other products like aggregates or coal, well, this market, or ores, metal ores, are dependent upon the situation in the marketplace and the mix of the Polish economy. And so if we look at infrastructural developments and investments like at PLK, the line operator, and so we can see that this work is moving forward swiftly. So we anticipate that this will stay at a stable level. So we're pleased that PLK and the General Directorate of Roads are quite active and are taking efforts to continue their investments, and they're trying to wrap those tenders up as quickly as possible. And so we can see that, and we can see an opportunity here for some stability or stabilization on this segment of the market in the upcoming period. But if we look at the coal segment, it really depends on the nature of the need the market puts forward. And so we have to adapt the rolling stock and the processes to that. So we're changing the organization in terms of the offer we give to our customers, but we also look at the internal cost structure to ensure that this is in line with the needs the market has. So we're utilizing our internal strengths and looking at the processes and the structures and the costs, and so we're basically adapting them to what the market offers. And it's not so much the case that we're thinking about somebody helping us or not, but 100% of our revenue comes from customers. And so we're a commercially minded company. We want to continue doing that. And we're refining our organizational processes in order to be able to generate a long-term profit in the near term, in the long term. And that's why we're adjusting those means. So there are some support mechanisms like this shield and the financial shield, but they are the result of global and domestic downturn in the market conditions. And that's why we're applying for these funds, because they are linked to the extraordinary global situation that has occurred. We also have an interesting question about our trade activities, about the terminals in Maloszewice. According to the person posing the question, the terminal in Maloszewice is stuck, and people are going through the Baltic Sea, through Germany, and into Russia. Is that the case, that the terminal in Maloszewice is actually blocked up? So I was talking about the border crossing when I mentioned Maloszewice. So this is not true that there are any problems with the throughput capacity in our terminal in Maloszewice. Now and again, the competition is trying to discredit Maloszewice, that we don't have the right tracks, right gauge, and that the trains are standing there. Well, we are running those trains on an ongoing basis without any disruptions, and we're running many more trains than last year. We can say that it's operating at top capacity. So we have Cargo Tour, which is actually managing this area, hasn't reported any obstacles whatsoever, either last year or this year, about receiving trains from Belarus. And so all of the trains that Belarus can send to us are immediately accepted and handled. So as we had nearly 400 cargo pairs of trains, so with large number of wagons. So we had a large number of container trains with 14,500 wagons. In March, we had a similar amount of traffic. So comparing the same period in 2019, we've seen growth in the teens of our activity. Comparing the period of 2014-2018, we had the wide gauge tracks. We had like 8.5 pairs of trains per day, and now we have 13, 14. We still have some reserve capacity. On average, we have some 40 pairs of trains. So there is no disruption there in Maloszewice, and this is an attractive path for shippers. In April of this year, we have Dybyszenka that's organized a new train from Shanghai into Berlin through that terminal. So we've had big investment programs to ensure that we can have greater throughput capacity in these terminals on the borders. We're aware that interest will grow. We see a lot of potential here. So the heart of the new Silk Road is in Maloszewice. We've got a logistics park, a modern logistics park that's being created there. So I think that information is incorrect and it's being utilized for some black PR. So if we look at the quantity of freight volume turnover, is quite large, and there are no difficulties whatsoever in the operation of that terminal. So based on these major questions which you've posed, I hope that I've been able to respond to them exhaustively. So some of the more detailed questions that have been posed, where you want to get some more information, then we'll send to you by email more detailed responses. So I'd like to thank you very much for your attention. I'd like to wish you a good day and lots of health. So thank you very much once again for your attention.